In this next lesson, ladies and gentlemen, we're going to start talking about the tools that we put into our charts that help us make our trading decisions. And the most important tools that we use are called moving averages. And if I take you over to this chart right here, you're going to see all these squiggly lines on the chart. So what are they? Those are what we call moving averages. This is our most important technical tool, and what moving averages show, very simply, is support and resistance. When we find the support on a chart using a moving average, that means we want to buy a stock. So when we find support, we want to buy. And when we find resistance on a chart, that means we want to sell a stock. So very simply put, a stock is going down, 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 down. It hits a point, it stops going down, we have found support, we want to buy. Stock is going up, up, up. It hits a point where it stops going up, it starts going down, we have found resistance. So our moving averages show us support and resistance where we may buy and may sell stocks. And we use 4 different moving averages. Our blue line is a 9 exponential moving average. Our red line is a 15 exponential moving average. Our green line is a 65 exponential moving average. And our yellow line is a 200 exponential moving average. What is an exponential moving average? Why do we use exponential moving averages? The simple answer to that is they work for what we do. Don't make it any more complicated than that. It took a long time and a lot of trial and error to figure out which ones work best for the trading that we do. So very simply put, ladies and gentlemen, when a stock goes down and hits one of our support levels, we want to buy. When a stock goes up and hits one of our resistance levels, we want to sell. And we're using our 4 exponential moving averages to figure out the spots where we want to buy and sell stocks. Again, the 4 that we use, 9, 15, 65, and 200. And this is going to help us find support and resistance on our charts. Let's start by using this 5-minute chart. And if we're looking at this 5-minute chart right now, we can see that we have 2 moving averages below where the stock is trading. So we just said when we have moving average below where the stock is trading, those are going to be points where we might want to buy the stock if it fits our trading criteria. The moving averages have different strengths. The 9 and the 15 are the weakest of our moving averages. We're only going to use those in one situation when we start talking about a trend trade. The 65 and 200 are the ones we're going to use when we start talking about a regular moving average trade. As the moving averages go down, they become stronger. When we hit our 65 exponential moving average, we may make a trade of it. When we hit our 200 moving average, we're almost always going to make a trade because that's a nice solid support level on the chart. When we're looking at a 5-minute chart, sometimes it's very easy to see where the support and resistance is. We see where the lines are. But by looking at this chart of Qualcomm, we can see that there are no moving averages above where the stock is trading. So does that mean we're never going to short the stock? No, it doesn't mean that. What it means is now we have to expand our time frame to find the point on this chart where we might want to short the stock. So we start going out. We go to a 15-minute moving average, and we can still see there are no moving averages above where the stock is trading. Let's go to a 30. Here we go. So on our 30-minute chart now, we can see we now have a moving average above where the stock is trading. That would be resistance. We might want to short this stock now if it goes from the current level up to this level here at our 200-minute moving average and make a trade by shorting the stock. Our thinking being when a stock hits resistance, it starts to go down once it hits that resistance level. Remember what we talked about. We can make money being long a stock and we can make money being short a stock. So when stocks hit support, we buy, they go back up, we make money. When stocks hit resistance, they stop going up, start going down, and we make money by being short the stock. So very, very important, a great exercise that you can do, and you should be doing. This is the only homework we're going to talk about the entire time we're talking about these moving averages and technical analysis. I want you to go through as many charts as you can. Take an hour at the end of the day when you first start trading. Put up a 5-minute chart. See if you can find support and resistance on that 5-minute chart. Well, I'm looking at Qualcomm, and I can see support, but I don't see resistance. So I want you to get used to quickly going through different time frames in these charts and finding the spots where we might want to make trades based on our moving averages. So the most important thing to take out of this chart lesson is to do your homework, Look for support and resistance when we don't find it on a 5-minute chart, and that'll be areas on the charts where we might want to make our trades. And remember, when we're looking for a support level, we want to buy a stock if it hits that level, and when we're looking for resistance level, we want to short a stock when that hits that level. Let's move on to the next lesson.